Yeah, good afternoon, everyone, and welcome to our Q3 2017 conference call. With me today are our CEO, Tim Höttges, and our CFO, Thomas Dannenfeldt. Tim, as always, will first go through a few highlights, followed by Thomas, who will talk about the quarter's financials in more detail. And again, after this, we have time for Q&A. Before I hand over to Tim, please pay attention to a usual disclaimer, which you find in the presentation. And now it's my great pleasure to hand over to Tim.
Yeah, thank you, Hannes, and a warm welcome also from my side. I'm pleased to say that at the 9-month stage, we are well on track for our 2017 targets. Q3 was a strong quarter. All our major businesses are growing customers and growing revenues. We have upgraded our EBITDA guidance again this morning due to T-Mobile US, and our free cash flow is on track for another year of double-digit growth. So let me start on page number 4. You know our philosophy. Strong investments drive customer growth and financial results. And because of this, we can keep growing investments to keep this virtuous circle going. Let's look at investments a bit closer. Year to date, our investments are up 12.2%, in line with our full year guidance of around 12 billion euros. Of this, we plan to spend a bit over 5 billion euros in our various German operations, including over 4 billion euros in our German unit. And as you know, a lot of this will be spent on fiber. I know you are worried about a German CapEx risk. I've seen the most recent CapEx consensus for Germany, which is now stable through 2021. As Thomas already said in the second quarter call, from today's perspective, that seems a reasonable assumption and provides a strong basis to deliver for German customers going forward in a number of possible scenarios. Because it makes sense, we continue to focus our resources on bringing high-speed connectivity to as many customers as quickly as possible. Last week, we switched on 3.5 million vectoring homes, bringing the year-to-date installations to 7 million. By the year end, we are aiming to rise this to 10 million. Just, consider that for a second. We have almost 40 million households in Germany, and only in 1 year, we are installing fiber to the cabinet installations for almost 10 million households. These homes will get 100 megabits per second now, and up to 250 megabits per second from next summer. We also started our fiber build-out to German business parks. You may have seen a number of announcements here in recent weeks, for instance in Hamburg, or in Düsseldorf, or in rural southwest Germany, or in the Pfalz. And we just won a tender for fiber to the home subsidies in rural eastern Germany. Where others talk, we just do it. Because of our investments, we grew across all our geographies in the US, in Germany, and in our other European operations. And the financial results reflect this. Year to date, our revenues are up 4.2%, our adjusted EBITDA is up 6.6%, and our free cash flow is up 8.8%. And we deleveraged strongly this quarter, reducing our net debt to EBITDA ratio to 2.3 times from 2.5 times the quarter before. So we are well on track for investing in our future and generating double-digit free cash flow growth. We raise our EBITDA guidance again for 2017 and keep executing against the targets from our Capital Markets Day in 2015. Slide 5 shows some examples for our success within our quarter, especially focusing on customers. In the last 12 months, we added a further 1.6 million converged customers. The number of fiber customers in Germany grew by 2.8 million, and in the US, we won 5.9 million customers. In the cloud, our growth has re-accelerated to 14%. Page 6, as usual, shows by means of a few examples how we drive customer experience through innovations. We doubled the customers in our smart home platform in the last 12 months. Over 350,000 customers take advantage of our hybrid. an increase of about 100,000 compared to last year. Downloads of our service app increased, as did our levels of online IT support. We are using digitization to simplify our processes and the customer experience. And like for our peers, this is of course an area of great focus. Our stream on tariffs in Germany have proved increasingly popular. We already have over 400,000 subscribers in Germany, and we have recently launched it in Croatia, Poland, and Greece. In the US, Netflix on Us is our latest Un-carrier proposition, and it is off to a very good start. Slide 7 compares our year-to-date performance with our guidance. It is fair to say that this year, again, we are quite comfortably ahead of the group level guidance we issued at the 2015 Capital Markets Day. For 2017, we now incorporate the recent EBITDA guidance increased by T-Mobile US. Adjusted for currency and accounting, this translates into the 150 million euros that you can see in our group guidance increase. The outlook for the remainder of our businesses is unchanged. Mainly due to higher investments in the US and Greece, we are keeping our free cash flow outlook for 2017 unchanged at around 5.5 billion euros, up from 4.9 billion euros last year. Before I pass on to Thomas, let me comment on last weekend's news regarding T-Mobile and Sprint. You will remember our statements in our first and second quarter conference calls that it is possible, if not likely, that there will be various discussions regarding various potential strategic combinations among industry participants, including ourselves. And we said it was far from clear that any such discussions will lead to a successful outcome. And this is where we are. In the last few months, T-Mobile US and Sprint, together with their parent companies, have explored ways to create a win-win for their shareholders and for US consumers by scaling up and realizing substantial synergies. However, this weekend, we decided to terminate our discussions. You remember our stated design criteria for a possible agreement: to be clearly superior to our excellent standalone prospects. Any merger would have to stack up primarily on valuation, on effective governance, on regulatory concerns, and have sound financial foundations. In the end, unfortunately, we could not make the equation work. And this is where we are. But what you can be absolutely sure of is that we did our very diligent homework on all of these criteria. Where do we go from here? The answer is simple. We won't stop. With our support, T-Mobile US has invested over $40 billion in the last 5 years. We are only starting to benefit from these investments. We are winning the network tests even before the new low-band spectrum has been deployed. You know our unique and massive regional expansion opportunity where we are just starting. And we are only just starting to leverage our B2B opportunity. Our financial performance is excellent, allowing us to maintain a high investment profile and strong commercial momentum. In Q3, for instance, adjusted for the hurricane damage, our EBITDA was almost $300 million ahead of consensus expectations. T-Mobile is in great shape and we won't stop. Or should I say we are just starting. But as ever, while we are excited by our standalone prospects, we will of course remain open-minded about other opportunities to create value for our shareholders. Before I hand it over to Thomas, let me also express my sincere thanks to Nick-Jan van Damme and Reinhard Clemens, who are leaving us at the end of this year. I'm very grateful for their contributions. You can see the strength of our German operations today. Now let me turn it over to Thomas to review our excellent third quarter in Germany and elsewhere in greater detail.
Yeah, thank you, Tim, and a warm welcome to everyone from me as well. So let's deep dive a little bit in the numbers. Adjusted EBITDA grew 3.3% this quarter and by 6.6% at the 9-month stage. Our adjusted net income grew 19.6% this quarter. And meanwhile, our reported net income is impacted by a write-down in T-Systems, which reflects recent challenges in the IT part of the business, especially a much weaker than expected order book. Year-to-date free cash flow growth is consistent with our guided 10% midterm CAGR and well on track with our around 5.5 billion target for this year. So moving on to slide 10 then. In Germany, our sales were stable this quarter, driven by growth in total service revenues. Our EBITDA grew 4.5%. Remember, we told you last time our EBITDA growth for the year would be back-end loaded, and we're now seeing the benefits from the operating expense reductions we expected, including, for example, the merger of our sales and technical field service. So clearly, we are well on track for our guided EBITDA growth this year. On the next slide, you can see that our reported total service revenues swung to a slight growth in Q3, both in fixed and mobile service revenues. And this is after the effects from roaming and the fixed and mobile termination rate cuts that went into effect in December last year. Underlying mobile service revenue growth amounted to almost 4%, and underlying total service revenue growth to almost 2% year over year. We're currently tracking a bit ahead of our mobile service revenue midterm growth CAGR, but we guided towards at the 2015 Capital Market Days. On the other hand, we are tracking a bit below the promised growth rate on broadband, so I think net-net, it's very fair to say that we are pretty much where we thought we would be. Looking at mobile on slide 12, our service revenues grew 0.9% this quarter. Based on our innovative tariffs, we are seeing a shift to higher value plans with continued growth in our own branded contract base. And that way we are able to monetize the growth in the data consumption. Despite various competitive promotions, our commercial performance has been very steady. Our own branded customer base grew by 137,000. And as you can see on page 13, mobile data growth remains very strong at 55% year on year, with the average usage now at 1.6 gigabyte a month. And we are making good progress with convergence. This quarter, we further increased the percentage of homes with Magenta 1 contract to 18%. And 40% of our Magenta branded mobile contracts are now part of a convergent relationship, up 9 percentage points in the last 12 months. Our upselling remains very successful and contributes to our improving service revenues. Magenta 1 homes spend on average now 8.8 euros per month more with us than before. So moving on to fixed line on slide 14. Here we rebounded to add 70,000 broadband customers this quarter. Our hard AP migration will continue through a year-end 2018, but we could offset this through the strength of our commercial offerings. Line losses also improved sequentially. Demand for our fiber product remains very strong with 700,000 additions this quarter, again with the majority coming on our retail platform. TV net adds benefited from the launch of our new Star TV in May and our Telekom Sport packages in August. The launch of Entertain TV Serie last month with the exclusive titles should further increase the attractiveness of our TV offerings going forward. So turning to our fixed products on slide 15, our retail revenues fell 0.6% year on year. Our broadband revenues grew 0.6% this quarter. This reflects the impact of promotions we launched last year, plus the ongoing headwind from our IP hard migration. We continue to expect a slight improvement in this run rate in coming quarters as last year's Test the Best promotion begin to roll over. On slide 16, you can see that we now pass 68% of German households with our fiber network. Let me remind you that next year we will ramp up speeds for most homes in our vectoring footprint to 250 megabits per second. 65% of our access lines are already on IP, up from 49% a year ago. This accelerating run rate takes us towards our target of migrating our B2C access lines to all IP by the end of 2018. So now moving on to our usual 2 slides on T-Mobile US. As Tim said, our momentum remains very strong. We won 0.6 million branded postpaid phone customers, 2/3 of the total market's growth. And we kept ARPUs generally stable, with prepaid ARPUs reaching a new record level of nearly $39. Service revenue grew by 6.5%, while IFRS EBITDA grew 11%, and this was in spite of a $148 million headwind from the recent storms. And as mentioned already, T-Mobile raised its EBITDA outlook for 2017 by $200 million. And on the next slide, as usual, we show some selected performance metrics for our US business. Our branded postpaid phone churn improved further and reached a record 3rd quarter low of 1.23%. Our bad debt expenses remained stable, with cost of service affected by the storm costs, but better on an underlying basis. As you can see, our US network has underpinned that performance, keeps getting better. The recent Ookla data shows that T-Mobile 4G upload and download speeds have been improving, while at the same time our competitors' network performance is worsening. By the end of this year, we will have deployed 600 MHz spectrum to 62 million POPs over 1.2 million square miles and launched 3,000 retail shops, many of these in new geographies to monetize our network and brand proposition. To sum it up, it was another great quarter for T-Mobile US. So moving on to our European segment, we continue to show positive commercial momentum. We added 265,000 new contract customers, including 56,000 in Poland, and we added 167,000 new converged homes. Our revenues in Europe were up 1.6% this quarter and up 0.7% organically. Reported EBITDA was down 2.9%, but adjusted for our recent reorganization and FX, EBITDA would have been down only 1.3%, in line with the trend we continue to expect for the year as a whole. And the next chart shows that we now have migrated 66% of our homes in Europe to IP. Our LTE coverage now stands at 93%, and our fiber coverage has reached 30%, with accelerated penetration forthcoming in Greece especially. So moving on to system solutions on the next slide then. Revenues rose 2%, while EBITDA fell 5.8%. But we continue to expect around 0.5 billion euros of EBITDA for the year as a whole. We are seeing good momentum in the cloud, in security, and in our road tolling business. Our connectivity business is growing as well. But we still experience headwinds from classical IT businesses. These headwinds have manifested themselves in a weaker than expected order book and the mentioned goodwill write-down. Looking forward, we are delighted to welcome Adel Absaleh as our new board member for T-Systems from beginning of January on, and I'm really looking forward to his contribution on the business. The next slide shows group development, which now comprises mainly T-Mobile Netherlands and our German towers. We're now showing the numbers on the slide here without the Strato business. We had another good quarter in the Netherlands with 66,000 contract net adds, and this is now the 9th consecutive quarter of contract customer growth. Dutch service revenue reflected headwinds from regulation and termination rate cuts, while EBITDA reflected changes in Dutch consumer protection laws and Roam Like Home. Excluding regulation, our mobile service revenues would have been up 1.1% year on year. Our tower business is still absorbing transition costs following the carve-out from our German segment. From 2018 on, we expect growth in revenues and EBITDA from new builds and increased co-location and amendment activities. As already mentioned, our 3rd quarter free cash flow was very slightly down year on year, but clearly above consensus expectations, and we are well on track to generate around 5.5 billion euro for 2017 as a whole. Growth in our adjusted net income was driven mainly by higher adjusted EBITDA and benefits from interest expense optimization. Higher taxes and higher share for the minorities, driven by the strong performance of the US, partially offset this positive impact. Our net debt reduction reflected A, the growth in free cash flow this quarter, and B, FX due to the euro's appreciation against the dollar. Recall at the end of this quarter, the US convertible will be exercised and result in further deleveraging. Slide 25 shows our financial metrics. And as mentioned, despite the US spectrum auction, our net debt fell to 2.3 times adjusted EBITDA, remaining with our comfort zone of 2 to 2.5 times adjusted EBITDA. And we're now particularly pleased with that. And my final slide, as always, summarizes the strategy we presented to you at the last 2015 Capital Market Days. We continue to execute well against our targets. It was a good quarter across most, if not all, our markets, and the best is yet to come. And with that said, we'd be delighted to answer your questions, and I guess I will hand back to the operator, or Hannes.
Thank you very much, Thomas. So back to me. We can start with the Q&As now. If you'd like to ask a question, as usual, please press star 1 on your touch-tone telephone. I will announce your name when it's your turn. And should you require to cancel your question, please press star 2. Alternatively, you can send us questions via webcast and just type the question into the box below your stream. And in general, I would be grateful if you could restrict yourself to 2 questions at the time. So with that, we move on to your questions. I think the first question is from Dhananjay at Bernstein, please.
Yes, thank you very much, Hannes. My question is related to fiber to the premise and the role of government subsidies to facilitate a potential rollout in rural Germany. Some of your competitors are suggesting that up to 24 billion euros in subsidies could be allocated to such infrastructure upgrades to about 8 million premises outside your target VDSL footprint. Can you give us a sense of how likely you think this scenario really is, and what role you expect to play as Deutsche Telekom should this scenario indeed materialize? Thank you.
Dhananjay, it's Tim. Welcome. So, quick answer on that one. Today, we have 1.7, billion subsidies in the market, and the municipalities, nor let's say the government, were able to spend the money. So we're talking about 718 million, which have been spent yet. The reason for that one is not that there is no willingness to spend it. Major is the approval phase and the construction capacities in Germany. One of the reasons is, that Deutsche Telekom is building big time on their fiber deployment in Germany. You heard the numbers from Thomas just a few minutes ago. We are opening up, let's say, a fiber-connected street cabinet every 4 minutes. Every 4 minutes while we are sitting here. And next year, it's going to be every 3 minutes. On top of that, we have this huge infrastructure programs going on in Germany for any other infrastructure. So the Tiefbau, the construction capacity, is very, very limited. The Chancellor, by the way, mentioned that already in several speeches because she knows about the situation. What we have done to compensate for this shortage is we are hiring people, around 1,000 people from Spain. We have people from Romania. We have people from Weißrussland, so working here for us already to fulfill these requirements. If these subsidies would go up significantly, I can tell you, we do not have a money problem. We have a capacity problem. That's the first thing. The second thing is, sometimes Vodafone, they are, jumping forward and then they're jumping back. Look, we are used to that one, but independent from that, they seem to find out that they have no interest that somebody's overbuilding cable. So I got already messages from Berlin that they are not interested in a high subsidized program. And I know from the small players in Germany that they are very concerned about these huge subsidization programs and that they are losing control about, let's say, the rollout of the footprint which they are aiming for. So there will be in the new government, however it might be constituted, a group of an amount of local subsidizations. I strongly recommend it's in the vicinity of 1 to 2 billion on an annual basis. The capacity will be hard to find. Hopefully there is some elasticity going forward, but I do not expect that, that there will be programs significantly beyond that. And even, the discussion that maybe the proceeds of selling Deutsche Telekom would help to fund this. If you talk to the leaders in this regard, I think there is now even more realistic approach towards the first ideas, but we will see. So that's my way looking forward. What it means for us, we will move on in our fiber build out, in our FTTC build out. We fulfill, let's say, the commitments which we have given to the public. We see that we are doing absolutely the right thing. We will have 10 million households being connected to vectoring by the end of the year. Think about that magnitude. And what we see is with 700,000 on an average customers a quarter, you see that the customers are voting with their feet, and we are very happy and very successful on the take-up rate which we currently see.
Maybe to add to that, on the specifics of and the experiences we have right now on those subsidization programs, as we are participating in those programs and have a good success rate. So basically we're talking about 2/3 of a success rate. For instance, in just last week, we won a public subsidy program to connect 40,000 FTTH homes in rural East Germany, the biggest one in Germany right now. So as long as we take a fair share, the terms are reasonable and the subsidies are not per se a bad thing. I think that's the way we look at it.
Thank you, Thomas and Tim. So we move on with the next question from Polo at UBS.
Hi, thanks. Just 2 questions. The first one is on the US and really a bigger picture question about potential M&A going forward. So if the DOJ are pushing back against a horizontal deal like AT&T Time Warner, can 4 to 3 mobile consolidation happen, or can fixed mobile consolidation ever happen in the US? And my second question is really just a clarification in terms of the German election outcome. So specifically, do you think a new coalition government will push for you to do more in terms of FTTH? And can I clarify also your comments about what politicians think about a DT stake sell down? I wasn't kind of quite clear in terms of what you're saying in response to the first question. Thanks.
Look, the first, whatever Deutsche Telekom is investing in this 4.2 billion or whatever number for this year, it's fiber. It's fiber. We are not building copper, we are building fiber everywhere. And we are connecting street cabinets with fiber. So in the new construction areas, we're building fiber. And even, in the areas of our business communities, we are building only fiber. So therefore, if some of our competitors criticize for us not building the right technology, I don't know what the right technology might be, but we are building fiber. So that said, this will not change going forward. Now, the government, is talking about a technology, and I make everywhere clear, and the ones, being in Germany and reading, let's say, my interviews or my statements on that one, I think we should keep the customer in mind. The most important thing are the needs of our customers. And the first need is that he is able, in his private life, to consume all kinds of services today and tomorrow in a sufficient, I call it tadellos, in a kind of zero-defect manner. This is our ambition. And that is what we are building the capacity for. And that is why we are trying to get as many customers as possible into this infrastructure. I think going forward, there will be a mix of technologies. There will be fiber to the home deployments in the cities. And I appreciate highly the possibilities which are given now that we have new kind of construction possibilities like micro-trenching and others in some cities. Second, there will be cooperation models. We have an alliance with all the small carriers, which is Mnet, which is EWE-Tel, which is Wilhelm-Tel, which is NetCologne and others, that we are trying to fight that the regulation gets changed, that when we're doing a cooperation model, And when we're building fiber, there should be no regulation for none of the other players. So we have to now convince only Vodafone and 1&1 that they're supporting us. I understand that they would love to use our technology, you know, but I think this is unfair from a way going forward. So cooperation models is the second way of deploying it. The third area is we should be technical agnostic. I think there are new technologies like Wi-Fi to the home, a kind of ONT outdoor, so that we do not have to go through the rose garden of every house here in Germany, but still deploying 1 gig into private homes. Or that we have 5G technologies for the rural areas where fiber deployment doesn't make sense. Or even G.fast in certain areas. So I will fight, and I will constantly fight for a technology agnostic approach. And if you look to the election programs or to the programs of the big parties, there are, like the CDU and CSU, the conservative ones, there is a technology agnostic build out. So a more customer driven build out. And this is, let's say, what we're going to do. I do not see that at the end of the day that one of the parties, nor the Jamaica coalition, will really, let's say, intend to force people only to go into the fiber to the home build out. And anyhow, they cannot force private companies to build a specific technology. So therefore, I think our build out scenario is very clear. It's built on first deploying now fiber to the curb, and really connecting the people who are not connected today, especially in the rural areas. This is a big political issue as well. Second, going to fiber rollout then in areas where we are fighting huge competition with cable. In parallel to that one, we are deploying the industrial zones because we want to enable digitization in Germany and maybe some offers to schools. And then we're going to, you know, improve our intensity to cooperate with the smaller players, that we do not have redundant fiber to the home build out and faster deployment of that one, always under the assumption that we have no regulation anymore on that one. And in the other areas, we want to deploy a technology mix which is supporting customers' demand. That's the way going forward. And we have a clear path towards this one, and that's the one I'm lobbying for.
Polo, on Hannes.
Yeah, I just wanted to add one thing. I think the situation in Germany, you should remember, is such that by the end of 2018, 70% of the population will have access to cable footprint. That's quite different from various other European countries. And we will connect over 80% of the population with fiber to the street. So, you know, we have a situation where, let's say, 85% plus of German households are spoiled for choice. And then you have a section of the population which isn't. I just want to bring this into into awareness, because it's quite a different situation from other countries in Europe.
And Polo, on your question on the M&A US perspective, let me emphasize again how committed and convinced we are about our standalone story in the US. So we are not worried about the T-Mobile US running out of steam. You know, our network leadership is becoming more and more apparent. We're enhancing the distribution footprint, B2B opportunities, so not only geographic expansion but also segment expansion. You've seen the financial performance, so there is enough firepower available. We are convinced that there is a very, very good standalone perspective. And in convergence, the US picture, as you know, is different from Europe. We believe there is scope for a successful mobile-only player, and our approach is always to be front-footed when it comes to content. So first we had Binge On, then we had Netflix offer in there. So as Tim said, it's a quite simple story. We won't stop. What we're not going to do is speculate about potential combinations in the market. As you know, we're never speculating on that one. Our way to deal with that is, if there's something to talk about, we will find ways to talk about and then find out.
Thanks, Thomas. Thanks, Tim. So next we move on to Simon from Citi. Simon?
I wondered if you wouldn't mind just talking a bit about Germany. And first question would be, what contribution price rises made to the growth rates that you've posted in the third quarter, particularly taking into account the nice improvement you saw over the second. And I think particularly perhaps focused on fixed, but maybe mobile as well to some extent. And then the second question is just on the customers that you've migrated to all IP. Do you see differences in behavior? Are there any helpful or possibly unhelpful changes in churn or the propensity to take up sold product or that sort of thing in terms of the customer side of that equation? Thanks.
Hi, Simon. This is Thomas. First of all, the simple answer on the question of price rises contributing to growth rates, it's very little. It's, as you know, we've made a price rise in Q2 in the single play that is coming through, but it's a very minor share of the whole improvement. The basic improvement is by a richer mix, so more customers on the M and L rather than the S tariff plans. By the way, that holds true for fixed and mobile side. And not for raising price points per se. And the second question is customer migrated to all IP. What we've seen there is better after migration. Sometimes we still have struggle and trouble in the migration phase with customers, but after migration, a good experience to customers. But let me remind you, our churn anyway is around 6 to 7% on a yearly basis. So there is no fundamental change in the churn here. But we know from the customer side that obviously there are some things you can do more easily, and the UX and the way you experience our business and our products is for a customer is improving. But as the churn rate is already so low, no significant changes here.
Thanks, Thomas. Next, we move on to Akhil at JP Morgan.
Yeah, hi, good afternoon. Two questions, please. Firstly, we've spoken a lot about CapEx, but I guess the other thing that people in the sector are debating quite a lot at the moment is the joint dominance regulation issue. So I guess I'm just keen to understand what your thoughts are on that, and I guess on top of that, how likely or not do you think that is? So just a general update around that would be useful. And then secondly, on the US and M&A, I guess another big picture question I was just wanting to follow up on was just in terms of how you think about or what you're able to say about the process and what happened. Yesterday, Sprint CEO commented that the big issue was Massa's unwillingness to relinquish control, which would seem to make that somewhat of an insurmountable issue, given that historically you've said very similar things yourselves in terms of control being important. So I guess what I'm really trying to get to is, are the issues things that you think are very substantial, very hard to address, or is there any possibility that at some point the conditions could once again mean you could revisit? Thanks.
The German discussion about the regulation currently is as follows. We have what we highly appreciate, this market consultation phase going on, how strong the market dominance is at that point in time from Deutsche Telekom, and on a regional basis. And we know that this has changed since the regulation of Deutsche Telekom was invented 20 years ago. So we hope that we will see region-wise significant less regulation on German fixed line than more regulation. The second thing is we do not expect that there are any kind of significantly price adjustments to the layer 3 bitstream access, which is part of the upcoming regulation, because we hear everywhere the support to say we understand that you're investing heavily, and therefore we expect that you have to earn this money back, and therefore we support, let's say, the cost-based approaches or analytics which we bring to their attention. A joint dominance regulation is nothing which is currently discussed here in Germany. Unfortunately, the Parliament and Council have both reacted to the pressure by national regulators organized in BEREC on this kind of things. So They do not want to see any kind of significant market power from one of the players here, but that there is a need for further regulation here is not the case. Even in the paper, in the code, we are discussing more the intention to deregulate companies who are investing into fiber. So it's not ready, and to be fair, there's a certain amount of frustration of the big players in this fixed line environment. I hope that we can convince the Parliament to change their approach to this one before it goes into the national consultations here. But what I've seen from the code so far is disappointing. It's not really motivating or encouraging us to invest more. But it's not worsened the situation, to be fair as well.
And I'm going to answer the second question, and Tim then can chip in later on the, if he wants to, on the US and M&A big picture. First of all, as always, we and I don't comment on Marcelo's messages. I think what is important, and you may recall that we've been always very clear on the criteria we set out to evaluate a potential transaction. And is valuation, it's the governance, it's antitrust issues, it's a sound financial framework. And all of those dimensions, their totality, are important to this to a discussion like this. I'm not sure whether it's right to single out one factor. But your second question, I think, was whether that deal is off the table forever. And I think the answer is twofold. First of all, never say never. I think that's clear. We continue to see a strong industrial logic. We've always been clear about that since the AT&T deal failed. So there is an industrial logic for a wireless market consolidation. And we always said it can make sense on the right, under the right terms. On the other hand, believe me, we surely did not make an announcement like this in ad hoc news this weekend because we wanted to continue the discussion anytime soon. So never say never, but I guess the ad hoc is giving you a kind of indication where we are.
Let me give a little bit more flavor to the situation with Sprint and T-Mobile US and the parent companies. The first, the relationship and with SoftBank and in person with Masa-san is very important, and I would have loved to see an even closer working relationship between the two companies. I very much admire Masa-san, his entrepreneurial spirit, his visions, and even his braveness to move forward with a lot of things, being it, let's say, in the Internet of Things, being it in the artificial intelligence, being it in even the satellite communication services. I admire Masa and I call him a friend. Nevertheless, business first. Always business first. And it's much more difficult in this relationship to say no than to say yes. We had a very intensive and good relationship. And honestly, I respect much more the partners on the other side than I did before in the way how we work together, how we built up the business cases, how we came up, let's say, over the due diligence phases, how we understood the different angles of this deal and of a joint activity. Now, that said, at the end of the day, you have to look on the situation of how is the valuation, how is an effective governance, how is the antitrust risk, and how is a sound financial framework, to be established for this kind of entity. And all of these criteria have been important for us on a decision. And you can be sure that we did our homework along all of them. And to just improve that, Thomas and myself, we flew 50,000 kilometers in 1 week to just check with everybody, what's the right way going forward and what's, let's say, the total equation of that deal. At the end of the day, I always said I'm not doing bad deals. And since I'm in this office, I'm very proud that so far I haven't made a mistake on that one. So I hope that you respect our decision on that one, even if maybe the intention at the beginning was a little bit different. I think there are a lot of big synergies in this case. It's a great opportunities. The doors to this great entrepreneur, Masa-san, and his team are never closed at Deutsche Telekom. But for now, I think we had to take a decision which has been communicated then in the last days.
Okay, thank you, Tim. Next question I take from Ulrich at Jefferies.
Yeah, thank you. I have two questions, please. The first one is an operational one on Germany. In mobile, the postpaid churn is down really quite far beyond sort of historical track record, and I was just wondering whether that's something that's happening in the branded base or in the service provider base, or whatever else you can say about that. My second question is on T-Mobile, maybe asking it a different way. In the past, well before potential discussions were sort of being debated in the market, I've heard you comment that T-Mobile doesn't really produce returns on investment, that US returns on capital, that returns on capital in the US overall, even at the leaders, are lower than in Europe on average, that there is no organic path for T-Mobile to reach returns on capital. So I'm just wondering, when you talk about being well positioned with T-Mobile, you could sort of interpret this as saying T-Mobile is in a good position to continue growing and taking share, but with no returns. So eventually you're building up something that will be, ever stronger deal partner at some point. Or are you now saying, no, there is really an organic path to producing commensurate return on capital with this sort of growth trajectory that we have built up for T-Mobile? Thank you.
Yeah, Ulrich, I'm going to start with the first question on the postpaid churn. It's quite simple. Our contract churn rate without Lebara, so the famous element of fluctuation we always have in the numbers, is basically, if you look at the last 5, 6, 7 quarters, it's more or less always 1% or it's 0.9, 1.1. So with a little bit of ups and downs, it's the same magnitude. No significant change, and the whole change is and the fluctuation is around that. I think what we've seen in the mobile market is very high loyalty of customers, high satisfactory customers on one hand, and well-working upselling, and in that contract part of the business, which is our own branded, there's no significant changes in dynamics.
On the second question with regard to the return on capital employed and the economic value added, Ulrich, you're absolutely right. 5 years ago, this was my assessment. And I have to admit I was wrong. So if I look, if I look to the numbers today and into the return on capital employed, comparing Europe and comparing Germany, or let's say the US, these return on capital employed are very, very close. And the take-up rate on the return on capital employed in the US is much faster than we have this in our big entities here, for instance, in Germany. So the development on the mobile side with this huge custom growth, which we have seen over the last 15 quarters, is helping us significantly in the improvements. On top of that, our capital costs came down significantly over that time. Earning our capital cost and even beyond is more likely than it ever was, even for our big, huge US operations. And whatever we do when it comes to new markets and new build-outs, we have this equation in mind. So with regard to this, I've very much changed the perspective from what this was the reason why we have invested so much money over the last years, because we see this positive development.
Thank you, Tim. And now I would like to have Fred's question, please. Fred at Bank of America.
Hi, good afternoon. Two questions, please. First of all, on Germany, we had a nice pickup in EBITDA growth in the quarter. If you could detail some of the key cost driver. You mentioned the merger of the tech services, but how we should think about cost and margins for that business in the medium term. And then back to fiber, if you could help us a little bit understand how you articulate a number of different timings, being the political timings, BNetzA timing, new announcements from your competitors, including Vodafone, the EC's work on communication code, with your own timing to define your high-speed broadband strategy beyond the targets you have for 2018. Thank you very much.
Yeah, hi Fred, this is Thomas. I'm going to start with the question about the German margins. I think key drivers, I mentioned one, which is the integration on the customer service and field service side. Obviously what you have there is, you know, in operations where you had redundancy in the structure the business was set up on one hand, and on the other hand you had processes being delivered to the customer or running through several organizations, and one part of the indirect OPEX reduction you see here is obviously streamlining the processes now in one organization is much easier, and getting rid of redundant infrastructure, organizational structures in there. So that redundancy element, process optimization is one part. By the way, there's also better capacity utilization of real estate locations and technology, which is a windfall or an effect of some parts of what we're doing in the IP migration. So all that adds up to what you see here, and I think that will support further on in the margins. I think we've given the guidance in 2015 on where the margins should be, and there is no change on that one.
With regard to fiber in Germany and the timings, look, we have a commitment with regard to the vectoring rollout in Germany, which is 2018, our main focus, and a little bit into 2019. Then we further, will improve the build out and the bandwidth in Germany, as we discussed it earlier today. That said, the most recent consensus is reflecting this CapEx requirements for our build-out with an almost stable CapEx projections of around 4.3 billion for the German segment through 2021, and a bit over 5 billion in the region of Germany as a whole. This is including all CapEx, including, let's say, 5G deployment and the IT requirements which we need, and that might give you an orientation. And as I said earlier, we believe that from an investment perspective, it is not a money issue at that point in time, it's even a capacity issue in the work. Now, the question about fiber build-out has even something to do with the decisions about the deregulation and the political support for that one. It's too early to say how Germany or the EC might decide on that one. I hope they're coming up with a clear decision on that one soon, and then we will give you our assessment what that means from an economic terms perspective. The only thing which I can leave with you, and take that serious, I will not invest into something which is not financial viable.
Okay, so the next question is from Russell at New Street, please.
Yeah, thank you. Just a quick one on the Netherlands. I was wondering if you saw the potential for a value-creating deal there. I guess Tele2 spectrum and asset might be available as of January. Now, obviously, in the past, 4-3 has been controversial in Europe, but do you think that the European Union might look at that deal in a different way, given the fixed-to-mobile asset, infrastructure dominance of KPN and VodafoneZiggo? And then my second question, I was just on the US. Obviously the asset is performing very nicely. I was just wondering, though, what does worry you about the medium-term outlook? I mean, I'm thinking, for example, densification for 5G, for example? Is that something that you would consider when thinking about inorganic opportunities? For example, do you worry the impact to your OPEX or CAPEX bill as you have to densify your network with small cells there? Thank you.
Look, coming up first with the Netherlands, and to be clear, in principle, we like market consolidation. In the Netherlands, we have two very strong integrated incumbents. And it seems clear that consumers would benefit if the two mobile-centric operators could join forces and really develop a powerful third force. But clearly, our first priority has been to strengthen our existing asset as much as is possible in the given circumstances. And I hope that the listeners here of that call would give us credit about how we are solving our challenged environments. We have fixed the Netherlands. Since 4 quarters, we are #1 in the contract net adds. We have fixed Poland, very encouraging momentum here, even from a fixed mobile convergence offerings. We have fixed the European entity, which is now on a growth pace again. So I would say more or less all big challenges, we've had 1 year ago, back to growth. Nevertheless, the good progress we are making and the good subscriber growth or customer growth which we have, and the excellent network which just won the P3 tracks for another time, we are open to the consolidation. That said, let's see what the other side might consider on this one and how the European Commission then might treat this, but that's our position at that point in time.
Yeah, and maybe on the US, what worries us most in the medium term, first of all, I think, as you know, we have great assets here, and one of the greatest asset we have here is a team which can deliver on network densification and rollout better and faster than any other team I've seen in the world. Just remember the integration of Metro PCS network into the T-Mobile US network. So I think in 5G we are front-footed. We leverage our new low-band spectrum. We're deploying small cells. I think other than in Europe, in the US, it's much easier to get the fiber access to the sites. As you know, in Europe, sometimes it's more difficult to get to a good connectivity setup for your sites. We have already the densest macro tower footprint, and as I said, rolling out fast on the small cells. So I think in terms of the capabilities, the ingredients for success, they are all there, and so there is no worry about that. What about the OPEX bill? Yeah, it's part of the equation of running a network. If you don't own the complete fiber footprint, like we sometimes do in our European operations, it's part of your financial and your economical equation, but that's no news. That's like today.
Thomas, let me add one sentence on that one. The deployment of the 5G capabilities with Nokia and Samsung will begin in 2018 already. And the 600 megahertz spectrum, where we gained the biggest portion, this will provide us the spectral capacity for the small cell deployment, but even for the deployment of the entire country. So this is for us the prerequisites for the 5G deployment, and I think we are well positioned in this area.
Okay, next we have Andrew at Goldman, please.
Yeah, good afternoon, everyone. I had a question on other opportunities in the US, and then one on cost cutting, maybe more domestically. So on the other opportunities, it's more on buybacks with reference to your comments that we have other opportunities to create value at TMUS. So how do you think about buybacks given the rapid deleveraging that you deliver with your free cash flow growth? Or given the IFRS changes in the treatment of operating leases, would you rather focus on de-gearing the balance sheet? If it is buybacks, when will you tell us about this? And would DT sell into a buyback? And then just on the cost cutting and digitalization, you clearly have a big opportunity here. is that something you can bring forward, or is it something you have to wait for the all-IP migration to be complete to deliver meaningfully on? Thank you.
Look, it's great to see Team US generating increasing amounts of cash, while their outstanding EBITDA growth brings down the leverage quite rapidly. That's very encouraging, even looking forward into the combination of T-Mobile US and Deutsche Telekom. So the choice you mentioned is definitely a nice one to make. That said, both dividends and buybacks have their merits. And I have to say, at this stage, we have no decisions to communicate, but we hear you as an investor.
Yeah, and on cost cutting, the way the IP migration works in terms of the savings related to that is partly it is basically the savings are depending on the completion. That's more or less the technical parts of the savings where you need to switch off platforms to ramp down the costs, and partly you see that already prior to a complete shutdown or retirement. For instance, if you can simplify processes, like I mentioned, part of what you've seen in Q3. So it is partly something which happens while you go, and partly you need to finalize the whole thing to get especially the technology savings. And that's the way it works. And that kind of pattern is embedded in all the guidance we've given you. So it's partly prior to retire and partly after retire.
Great, thanks, Thomas. The next question is from Usman at Berenberg, please.
Hello, gentlemen. Thank you for taking my question. I've got two, please. The first question was just on the German. Would you be able to segment the trend between the consumer and enterprise business? I know last quarter, for example, enterprise was up 4%, consumer was slightly down. I mean, has there been a significant change in that trend this quarter? And then the other question was just on the all IP migration. I think Tim, you mentioned in a recent roadshow that the all IP kind of migration was costing around 500 million in German OPEX per annum. So the question really was, as we get to end 2018, is it the case that suddenly the 500 million OPEX just drops out, or is that more phased over a number of years? Thank you.
Okay, Usman. So Hannes here. So I will answer both questions, actually. The first one, okay, if they let me. No, okay. So the first one on the B2C and B2B trend, I think we are happy to see good trends in both segments of our business. I think we are monetizing our customer base well. I think there's not really that much to add. So I think what you would see in this quarter, I think both units, contribute to the strength of the performance, and we hope and are confident this will, continue. So as far as the all IP costs are concerned, and so first, it's our B2C rollout that will be completed by the end of 2018. So we still have B2B work to do in the German segment and in systems. So we will start to see some of the benefits, as Thomas has described earlier, coming through at the network level, and others will take longer, as per our guidance at the Capital Markets Day. And so I think it'll be a phased and gradual development with some improvement coming through beginning in 2019. Next, I will take a question from Sam at Exane, please.
Two questions, if I can. Just the first one on mobile service revenue in Germany. I think the kind of quarter-on-quarter trends look like they're improving quite a lot on an underlying basis. I don't know if you could just talk about what you're seeing in terms of more for more, maybe average kind of gigabyte packages people are taking. You mentioned a bit more towards the medium and large packages. I guess it seems to be having a pretty positive impact. And then secondly, on the US, we didn't get to ask John and the guys this at the quarter. What kind of productivity or kind of comparison can you make between some of the new stores you've opened this year compared to existing stores, and when should we expect that to start ramping up a bit more? Awesome, thank you.
Yeah, go ahead. It's all Germany, man.
Okay, then go ahead. Don't worry. You know, I'm lazy. Go ahead.
Okay, so I'm going to start now with the German question. I think basically what we've seen during the course of the last quarters is an improvement, as I said, in the mix of S, M, and L. What you've seen if you just add M and L, so the higher, the more richer tariff plans, the percentage of customers taking those has improved by 15% roughly, and that was basically driven by more volume, but also Stream On. You know, the way Stream On works is you only can get it if you're an M or an L customer. So what we're doing is we're using those elements to incentivize the people and then the customers to choose more richer products, and that is what works well and what is shifting the rich into the mix into a much richer shape. And I think that's basically the answer on question number one. And now Tim, US.
Yeah, look, I would say, you know, it is still too early, you know, to tell you something about the productivity of the new shops. It normally takes 12 months, you know, to know exactly where, how successful they are. It's anyhow, you're much more flexible in reacting on good and bad shops. Year to date, T-Mobile has added 1,200 Magenta branded and 1,300 Metro PCS shops, and plans to add an additional 500 shops by end of the year. And what we know for far, so the latter category has so far tracked sales productivity quite nicely. It is always associated with the 700 megahertz deployment. So wherever we open up an infrastructure where we haven't been before, and opening up a shop, the productivity of this shop is quite encouraging. So anyhow, we are much more flexible in reacting, and therefore we are not concerned. We are monitoring it, but to give you a full, let's say, productivity analysis on that one, it's quite too early.
Thanks, Tim. So next question is from Mathieu at Barclays, please.
Yes, good afternoon. Thank you. So I have two questions, please. First, with regards to EBITDA and CapEx at the group level. So for the second time, you raised your EBITDA guidance, which is great at the group level. You haven't changed your free cash flow guidance. So my question is really, if we look ahead, if you continue to do maybe better than you had expected on EBITDA, is that something that you would use to invest more because you see more projects where you can deploy that capital effectively? Or at some point, do you think the free cash flow growth can accelerate? So that's the first question. And second question with regards to costs. So we've all focused a lot on the all IP migration and the costs associated to that. But I imagine that there are other areas where you're working on digitalization, et cetera, and it's very hard for us to compare between companies where they stand on all these different aspects, the network, the IT system, the customer interaction. How do you think you're doing there, and what are the big areas where you still think you can improve efficiencies, but also probably need to invest to get those efficiencies? Thank you.
Yeah, thanks, Mathieu, for the questions. First of all, on the EBITDA and the CapEx of the group, I think you're spot on. We've increased the EBITDA, but not the free cash flow. And that's simply, I think in Q2 you've seen that the US raised the CapEx or moved up to the upper end of their CapEx guidance because they are accelerating 600 rollout this time. It is the Greece operations. Spending more money on the fiber deployment there, and I think that's, you know, that pattern. For instance, from the German side, what happens in Greece as well. So we accelerated the rollout there, and we'll see good network infrastructure, and for sure also then revenue improvement, and then finally EBITDA improvement with that. So my way, and I said that last quarter already, you know. My way to look at the whole free cash flow guidance is we've given a clear message in terms of what you should expect, and we will deliver on that one, and we'll make sure that we deliver on that one. Whenever we can create headroom, we have a discussion whether there is money to be spent in a way that we can keep going with that kind of fantastic run rate an improvement on the free cash flow, and this time 600 for this year in Q2, and increase the rollout. That was the decision behind.
So now we extend this call for another 2 hours, because this question is very exciting and very relevant for our business, talking about, let's say, the impact of digitization on our businesses. Look, if from a strategic perspective, if you ask me what are the challenges of our business, the first one is the competition which we have in our market, still ongoing. The second is the threat from over-the-top substitution. I think, it was very intensive over the last year. It has slowed down. So it's not anymore that new kind of business which are entering into our landscape, like SDN, cloud providers, or like network of network players. These are new business models which are trying to substitute services from us. This is something which is increasing. And the fourth one, which is a challenging item for us as a telco, is more digital telcos. So telcos are really leveraging their capabilities in a more, productive digital way. So this is something for an old incumbent like us, where we have to react on. So the digitization of our internal processes and the process towards the customer is one of the key amendments which we will do, or which we have done already, to our strategy. To give you some examples how we want to drive that, and it's the simplification which we have to do within the starting at the front end. For instance, in Germany, we have recorded 3.6 million visits on our Magenta service app. This is an increase of 28% year-over-year, and this is reducing the load on our offline channels significantly. And in Austria, another example, this company is now using a web-based chatbot, which is helping to answer questions of customers in a much more efficient and faster way. Second topic on how we drive digitization is, for me, the topic of advanced analytics. By analyzing and interpreting all the data which we have, and we are sitting on tons of data on a personalized and individual level, we have increased the conversion rates of specific campaigns by more than 70%. Much more individualized offers, which we can create, and which are much more resonating than with the customer. Another one is the back end. We use robotics to automate big processes, standardized routines in ours, and to generate efficiencies, equivalent to 1,000 employees each year in Germany already today, and we're just at the beginning of that one. Or we even use big data analytics to improve, to manage our field forces. This is something that we are experimenting with. And the last one, just, another flavor is we are building our own bot, that every employee can change and automate the processes individually using in the company. So if you are, looking about your salary, if you want to, go on vacation, you go into standard routines within the IT systems, and we are now created the capability that every employee could build his own bot, and by using this bot, he could significantly improve his own productivity. So it's a big effort which we are addressing. I think it's a more and more coming topic for our industry, and therefore more to come in our bilateral talks, or even later the year, to give you a flavor of what we're doing here.
Thank you, Tim. We are working.
Just to add one element, because there was one aspect of the question I think is still open. That's not so much a matter of big investments, CapEx investments. That's what Tim mentioned. The whole process is much more about the way people work, how they address the challenges they have every day in their business, rather than big investment things. So they don't expect any big numbers behind that one.
Thanks, Thomas. Here speaks the IR bot. Okay, so next question from Robert Grindle at Deutsche Bank.
one joke about that, Hannes. Just two quick ones from me. The first one on T-Systems. The business has been a bit sluggish for some time, and despite cloud doing better, and you have written down some goodwill. What was the main problem with the order book? Obviously, it was light, but was it coming from any particular segment? And I think you've got new management there now. What's the prognosis on a forward-looking basis? Are we just looking at more stable EBITDA, or should we be expecting a little bit more pressure from here? And then a follow-up on the mobile service revenue question. Any reason to think, and it was a great print this quarter, any reason to think why the trends aren't persisting into Q4? And linked is any reason to think that the handset upgrade cycle is turning in Germany? You do seem to have quite a high handset revenue this quarter, which also helps you on the service revenues. Thank you.
I'm going to start with the T-Systems question first of all. So that is, oh, I missed that. Tim wanted to take the question. So bad luck. So I need to deal with me now. Okay. So on T-Systems, basically, if you look into T-Systems, you have the international telco business. You have the security part. You have IoT. You have what have I missed? Other than IT, obviously the cloud business. And our road toll business. All those are doing well. All those are growing. And so that is not where the issue sits. The issue is clearly on the classical IT business. I think that complete market is in a decline, first of all. Secondly, we've increased our levels of profitability we want to see in those deals. And that's the key reason, I think, or the key reasons why we've seen order book declining. Basically, the write-off you see in there is a reflection of what we've seen last 4 quarters in terms of the development. As you know, we hired a new guy for the IT business and having Adele on board. Both are IT experts. I think that will give new impulses for that business. But to be clear in terms of what you should expect, we feel absolutely comfortable with the consensus regarding T-Systems. And so I think that should give you an idea about the forecast. The second question was mobile service revenues. I missed that question. What was that? Can you take it?
Yeah, I think, Robert, if I understand you correctly, you wanted to get a sense for how sustainable our mobile service revenue trends are. And also you had a question on the handset cycle. So I don't think there's anything particular on the handset cycle that is worth communicating. I mean, I think everyone is aware that when the iPhone arrived in Germany and so on, but it hasn't. I wouldn't look at this as something where we have anything to communicate. In terms of the service revenue performance overall, I think we are encouraged by current trends, and we have no reason to think that these trends will dramatically change at any time soon. But they're driven by good monetization, growing data usage. You see our KPIs doing well, and etc. But of course, we're to some extent also dependent on the competitive environment here. But it's fine where we are, and we are happy with where we are. And long may it last, and hopefully it gets even better. So the next question is from Ottavio at SocGen, please.
Hi, good afternoon, gentlemen. I have 2 questions, actually 2 follow-up from comments made by Tim. The very first one, it's on the fiber and in reply to the Vodafone gigabits investment plan. If it's possible to have a bit more granularity, because in your communication you give a lot of data points for consumers, but it's possible to share a bit more with businesses. Vodafone is talking about or targeting 2,000 business parks, and according to them, there are something like around 32,000 in Germany. So my question is that in how many of these business parks, first of all, are these numbers correct? So 32,000 is the correct number. And how many of these business parks you already connect with your own fiber? And what will be your target? And is possible also the timing? The second one is also another follow-up. It's on the comments Tim has made on the CapEx envelope until 2021. You said that you're relatively comfortable with consensus at 4.3 billion.
you also mentioned that that includes 5G. Now, your fiber plan has got a lot of attention, but looking at comments made by policymakers around, looks at 5G is also becoming pretty important in Germany because of the very high lobbying from the automotive industry that's very strong and a very big interest they have in self-driving cars. So my question is, until 2021, is the case that 5G potentially is not be fully rolled out, so it will be back-end loaded, most of these investments? Or do you reckon that you just waiting to see how much the automotive industry will put in terms of their own investments to go and potentially match up those investments? Thanks.
So good questions. Ottavio, first thing on fiber. Now, the Vodafone Gigabit Investment Plan, which is an amount of, I think, 2 billion or whatever, you know, it's a joke. It's a joke. And so, you know, we are investing in the German entity 4.2 billion into infrastructure on an annual basis, and we're moving on, and we are doing that already for the last years. Therefore, you know, we see that, but again, Vodafone is very strong in the way of selling something, but I think sometimes I really question the substance on that one. So that I don't say that arrogant, but even, you know, City Fiber announcement today, I haven't looked into the details, but I do not believe that they are approaching 5 million customers, but that's just a side comment. Now, that said, we have on the business parks the following analytics. 10,000 business parks in Germany. From this 10,000 business parks, there are 3,000 which are really relevant. Because in this 3,000 business parks, more than 80% of all SMBs are registered. So this is the so-called very intense area, and this is the area which we are tackling first. This is part of our investment plan. This is part of our CapEx, which we have laying out, and we want to connect them all. I mentioned that already at the annual meeting, and that's our plan, and we have started already. Every week, we are announcing a new opening on that one. Thomas made, I think, 4 or 5, you know, big cities in his speech, but there's much more. If you're interested, you know, we could easily release all of this. This is, let's say, our first areas on the site, and then we will see whether there is additional subsidies coming for other ones or rural ones, but it's too early to say at that point in time. And anyhow, our capacities are fully loaded on these areas.
Yeah, maybe then on the CapEx and 5G question. So first of all, is our fiber or 5G plan due to automotive sector developments and announcement? No, it isn't. It is driven by a very simple thought. We are the network leader in Germany on mobile. And we are on 4G, and we will stay that on 5G and even increase the gap to competition. And that means we are starting basically now with a lot of preparations for 5G. We'll make sure that we have the site densification, so all the sites in place, that we have the fiber backhauling in place. By the way, as you know, the vectoring rollout is delivering to a huge extent the densification of fiber you need to get to a really good 5G infrastructure. So that is driving us. And yes, there is a potential application which is related to automotive sector in there. But, you know, as Tim mentioned, there is also potential application to deliver higher bandwidth via 5G in not so dense areas, and so on and so on. So yes, there are various applications in 5G we can talk about at length, and those are obviously driving our thoughts and our investments on 5G, but not just one single industry sector or application of that. But in essence, it's quite simple. We are the leader in terms of quality to the customer, and we will stay that in 5G, and that's how our investment profile is set up. And so it's not back-end loaded, it's just a normal ramp you see in it in a new technology.
And as before, we think that the current consensus covers what Tim has mentioned related to the B2B build-out, our residual FTTC rollout, and various other things that we've mentioned, as well as the 5G investments that we expect over this time. That's at least how we look at it at this point in time. So the next question from Guy Petty, please, at Macquarie.
Yeah, hi all. Just two very quick questions. Towards the end of the quarter, and actually since then, we've seen quite substantial changes in tariffs by Telefonica Deutschland and 1&1. I'm just wondering what you thought of those, given you're now at a substantial premium for their sort of higher volumes in the German market. And secondly, on the broadband space, clearly there's been a strong in-sale of your vectoring product, but the overall growth in the industry does seem to be sort of a bit lackluster for yourselves and are still very much focused on cable. Do you think there's anything you can do to continue to stimulate the broadband growth, or do you think we're sort of starting to max out at the appetite for broadband in Germany? Thank you.
Yeah, first of all, I don't see any significant change on the mobile side. Telefonica is out with their tariffs, I think, with their structure since May. 1&1 is just, it's with a certain delay. It's clear that there will be a similar follow-up of that. So I don't think there was any substantial change in dynamics other than normal promotional activities in the last quarter on the mobile side. What's always good, and you know that, we love to see data usage going up. We're driving that. I think there are various ways to do it. TEF is more in terms of big buckets. We are more stream on. We like more the way to give the customer the clear message: you use as much as you want and you don't worry on applications like mobile video and mobile music. But other than this principal dynamics of increase of data, you see that plus 55% in the usage increase. I think there are no fundamental changes. On the B2B side, the growth, if you look at not at the net numbers, but the gross numbers, you see that we're pretty much on our fair share in the market. If we exclude the headwind we have on the IP hard migrations, was, by the way, the same vicinity like last quarter, so mid-20s. If you add them back, you see that we are on the net adds as well as on the gross adds easily on our fair share. So I think that's no reason to worry on that side as well.
Excellent. So our next question is from Stefan at Raymond James, please.
Yes, thank you. Just one. Following up your supportive comments for Massa's investment strategy and looking at Orange taking a surely different angle, but still a bold move with banking. Do you have any appetite and identify possibly new fields of investment outside of the classic telecoms and TV field in a let's say a more medium to long term approach? Thank you.
Look, the first thing is, I said it, I think, last year in Barcelona. If you really want to buy a pure network provider who is very clean in the way of focusing his investment into a superior integrated IP network, here you are. That's the profile of Deutsche Telekom. That's the DNA. That's why investing more than the rest of the team. We are not, spreading our money around all places. We are very much focused in the way. The network is the basis for whatever we do. Mobile integrated networks, mobile fixed line, head nets, and the like. Now, do we have intention to go into banking? No, we don't. This is something where we believe it's better to partner. So when somebody has, let's say, a solution here in this space, we will establish partnerships. We have 150 partners already around our infrastructure network here, which is working very, very nicely. And if we want to earn money with that one, we even have a vehicle which is doing even very nicely, which is the DT Capital Partners. where we invested a lot of companies into over the last year. It's always in the magnitude of 10 to 20 million per investment, and this company is a possibility that we commit to some new businesses, vertical solutions, the moment we deploy them into our customer base and into our infrastructure. There are some areas which are helping us to create an access plus, so a kind of, covering the pure access platform services and alike. And this is something which we always would consider. For instance, entertain our TV service is something which is helping us to sell connectivity in an added value way. This is something we're pursuing on, and we will not change the strategy. I think we're very much focused. We have a few bets around it. TV is one of it. Big IoT is another one. But even here, we will not go into the vertical solutions and more into providing a platform service.
Thanks, Tim. And I have a question per email from John Dan at RBC. So he asked regarding the group excluding the US, whether we have now reached an inflection point. This quarter we were up 2%. And he specifically asked if the EU and T-Systems drag has peaked and whether this is now a sustainable growth performance.
And the answer is yes. As we said, we should expect a higher ex-US EBITDA this year, and you should expect another growth next year. Yeah.
The last question is from Walt Pajcik at DTEGY, if you're still on the call. Okay, so he's left the call. And with that, I think we went through all your questions. If you have any more questions, please contact us at the IR department. We promise you that it will not be a bot for the time being, although Thomas is working on it. And I know somebody actually contacted me and said we should not get a bot, and they still prefer real people. And with that, I would like to hand back to the operator.